So what do we expect in 2026? Looking ahead, the outlook for GB and Europe is one of cautious optimism. Forecast points to a return to growth in Europe construction output, led by infrastructure and renovation, while other sectors remain mixed. They typically support stability market conditions, with opportunities for further softening where competition is strong and performance is good.
Welcome to the Global Construction Market Update Special, a subset of the WTW Construction Blueprints podcast. In this short series, you'll hear from our experts on current market conditions for construction insurance.
Hello and welcome back to our Global Construction Podcast series. We are discussing the current state of the market across Great Britain, Europe and the Middle East. I'm Mike Venables, construction broking leader for Great Britain, Europe and the Middle East, and today I'll talk you through the key themes shaping the construction insurance market and what we can expect as we move into 2026. We will start with the state of the market. Let's start with the big picture. We ended 2025 with more market capacity and, in many areas, stabilising of softer pricing. That is especially true where risks are well managed and not heavily exposed to natural catastrophes. New entrants and a growing appetite for insurers have definitely increased competition, leading to rate reductions on many projects and annual CAR and EAR placements. In Great Britain, the market is quite competitive for standard builds, and mid-market programs are seeing more favourable terms. But high-rise buildings and complex engineering projects still face closer scrutiny, particularly around fire, water damage and cladding risks. Professional indemnity is one of the bright spots. Capacity is up and we're starting to see broader fire safety and cladding provisions return, albeit on a cautious case-by-case basis. Now, moving across to Europe, construction activity is shifting more towards infrastructure, energy transition, data centres and retrofit. Labour shortages and persistent cost pressures continue to influence delivery risks. But overall, the insurance market remains stable, with room for improvement in coverage, especially as reinsurance conditions have become more favourable heading into 2026. And the Middle East. Momentum is still strong. Major infrastructure and city building programmes in the GCC remain central. What's changing is the discipline. We're seeing more structured phase gating and more emphasis on bankable and DSU security packages to allow finance. The insurance market remains competitive for clients who engage early and provide robust risk information. So what do we expect in 2026? Looking ahead, the outlook for GB and Europe is one of cautious optimism. Forecast points to a return to growth in Europe construction output, led by infrastructure and renovation, while other sectors remain mixed. They typically support stability market conditions, with opportunities for further softening where competition is strong and performance is good. From a capital standpoint, the 2026 reinsurance renewal reflected a buyer's market. Record availability, capital, benign catastrophe experience in key regions, and more flexible structures. This should support capacity and keep down pressure on a risk-adjusting pricing. The caveat, large engineering risks and net cat exposed projects will still see disciplined underwriting. In the Middle East, 2026 is shaping up to be a transition from scale to performance. A lot of major programs are moving from visionary master plans to measurable delivery, with some rescoping, some timelines reset, and a much greater focus on execution. Rewards projects that can demonstrate delivery certainty, resilience, supply chain, and solid site controls. The key issues for construction and principles. Three big themes stand out in 2026. Number one, cost inflation and labour. General inflation may have eased, but construction costs remain high, and labour shortages, especially in specialist trades, continue to influence tender risks, program certainty and severity. Number two, regulations and liability in Great Britain. The Building Safety Act is reshaping liability models. PI conditions have improved, but legacy exposure, tool risks and cladding-related issues still require careful disclosure and contract oversight. Number 3, natural catastrophe and climate. Recent flooding and severe weather in Europe highlights how exposures are changing. For builders' risk, this means site protection, water management, and temporary works control are more important than ever, especially for securing DSU terms. And in the Middle East, the rising complexity of programs means projects supported by strong engineering and aligned with lender expectations are securing smoother placements. Capacity, appetite, and pricing in 2026. Here's what buyers should expect. Capacity and appetite. Overall, capacity remains plentiful with broad participation and increasing line size. MGAs and new markets are adding competitive pressure. Complex tunneling, power, and net cat exposed projects will still need clear marketing strategies and early engagement. Pricing and terms. Where risks are strong and loss experience is favorable, expect stable or slightly softening pricing. But we should still expect firmness when water damage exposure is high, where occupancies are changing, or where geopolitical risks is a factor. Middle East details. As giga projects get rescheduled or rephased, package size and DSU profiles will shift. Insurers will reward credibility, phase gating, robust commissioning plans, and transparent critical path management. Practical tips for successful 2026 placements. 2 practical tips stand out. 1, engage early. In 2026, early engagement will be a major differentiator. Insurers are rewarding early, high-quality submissions, especially where they include clear insight into construction methods, water ingress planning, commissioning strategy, and supply chain resilience. Number 2, use global market reach. With new entrants and varied appetites across GB, Europe, and the Middle East, the right placement strategy is often global. Clients benefit most when brokers align each project with the market that offers the strongest appetite, not just the most familiar hub. This global approach leads to broader coverage, stronger competition, and more favorable terms. Thank you for joining me for this episode of the Marketplace Insight podcast, and I look forward to seeing you next time.
Thank you for joining this podcast from Willis, a WTW company featuring the latest thinking and perspectives on people, capital, climate, and risk in the construction industry. For more information, visit WTWCO.com. WTW offers insurance-related services through its appropriately licensed and authorized companies in each country in which WTW operates. For further authorization and regulatory details about our WTW legal entities operating in your country, please refer to our WTW website. It is a regulatory requirement for us to consider our local licensing requirements. The information given in this podcast is believed to be accurate at the date of publication. This information may have subsequently changed or have been superseded and should not be relied upon to be accurate or suitable after this date. This podcast offers a general overview of its subject matter. It does not necessarily address every aspect of its subject or every product available in the market, and we disclaimer all liability to the fullest extent permitted by law. It is not intended to be and should not be used to replace specific advice relating to individual situations, and we do not offer, and this should not be seen as, legal, accounting, or tax advice. If you intend to take any action or make any decision on the basis of the content of this podcast, you should first seek specific advice from an appropriate professional. Some of the information in this podcast may be compiled from third-party sources we consider to be reliable. However, we do not guarantee and are not responsible for the accuracy of such. The views expressed are not necessarily those of WTW. Copyright WTW 2025. All rights reserved.